Hey everyone, how's it going today? Well, with all the uncertainty in the market because of the election, many are predicting there could be a stock market crash. In this video, I'm going to show you a few disturbing charts I found and some current charts of several key stocks that I think could be hinting what's coming next. And then I'm going to give you my take on the market and what I'm expecting will happen. If you are new to the channel, I like to find trading and investing opportunities in typically lower priced stocks. I like to find undervalued, underappreciated stocks with high growth potential and talk about all other things finance related as well. If that's something that interests you, please consider subscribing so you don't miss any future trading or investing ideas. And remember, I am not a financial advisor, so please do all of your own research before buying any of these stocks. Now, some of the big names in tech and especially high growth companies have been looking very weak lately. Now, is this just a normal pullback or are they starting to top out? This chart suggests that time could be running out. It says over the last 3 years, growth has experienced a meteoric outperformance over value. And this chart shows a comparison of the Russell 1000 Growth Index versus the Russell 1000 Value Cumulative Return going back to 1990. Now, if we look at stage 1 of this chart, we can see that returns were practically on par until growth started to accelerate because of the dot-com bubble. In stage 2, when the bubble burst, it says that growth lost a decade of outperformance in only 6 months and continued to underperform for the next 7 years. Now, if we go to stage 3, the yellow section, it says growth then took a decade to break even from its trough. But we fast forward to December of 2016 and growth has started to outperform again, and now it has accelerated into hyperdrive. Now, if we look at this chart, it says the outperformance has been dwarfed when you compare it to the NASDAQ. And this is a chart of the same time period when you compare the NASDAQ to those same two indexes. And here is a chart of the NASDAQ versus the S&P 500 over the same time period. Now we can see that the NASDAQ could be in the final run, and if we get a vertical move up, this should signal the end of the bubble. Now, the end of a bubble is a trader's heaven, but it turns into a speculator's hell for those that think the market is just going to go into the stratosphere. Now, we can go on for a long ways, but it won't go on forever. And you can refer to the dot-com crash for a general shape of what happens next. The attempts of the government to pump up the economy with new money is resulting in it going straight into equities and the giant high beta stocks. And this is the malfunction of the quantitative easing mechanism that supports asset prices. All right, everybody. Well, let's get into the charts right now. I just want to take a current look at what's going on in the market. And the first one I'm going to bring up is the Qs, the ETF of the NASDAQ. And it looks like we are starting to form a triangle consolidation, possibly. It's a little in the early stages, but it could definitely get there. It looks like it's starting to form. And this pattern represents uncertainty, which is what is going on in the market right now because of the elections. So it's going to be interesting to see which way this one breaks out. I would guess it's probably going to break out to the upside, but it is still in the lower portion of this triangle. So one big down day could definitely send it through that lower trend line. Now, if we go to the hourly chart, we can probably see it better. And we can. The Qs are fighting to get above that 50-period simple moving average on the hourly chart. It's having some problems at the moment, but it's hanging in there, so it could definitely break above it and then get above the yellow line, which is the 200-day simple moving average, or I should say the 200 hourly simple moving average. And if it can get above that, I think we could definitely see some strength. But it's going to be interesting to see how the election plays out and which way the market goes, because you never really know. I'm guessing that if Biden does win, we might get a little bit of a flash crash. I'm not sure, because he's been talking about proposing a huge stimulus, which of course would be good for the economy, so could react positively. But let's go take a look at the diamonds, which is the Dow Jones Industrial Average. You can see this one is basically forming a little bit of a rounding top at the moment. It's pretty much just going sideways. It looks like it is in a holding pattern as well, waiting to find out what is going to happen with the election. So there's really not too much you can take from the Dow, but it did find support at the 200-day simple moving average and is bouncing up. So it is in between those two major averages, the blue line and the yellow line, and we're just going to have to wait and see how that plays out for the short term anyway. Let's go over to the SPDR, which is the S&P 500 ETF, and they're all making basically the same pattern. You could argue this one is probably making a little bit of a triangular consolidation pattern. So this one is also in a holding pattern, probably waiting to see what is going to happen with the elections. But if we look at some of the bigger stocks, we can see that a lot of them are starting to get weak. I mean, if you see Amazon, Amazon's basically gone sideways since July. Of course, it is a pretty tight range because Amazon is a pretty large range because Amazon is a big stock and it's hanging out at the lower portion of that range right now. But basically just going sideways, I would consider it weak because it is below that 50-period simple moving average. It is still above the 200, but it is below the 50. And the 50 can be a chore to get over sometimes, which it kind of was right here for Amazon. And when it did pop its head back above it, it wasn't above it very long, and it fell right back down. So I would say Amazon is probably a mid-range stock as far as strength goes. Now, one thing to consider, since the market has been tapering down a little bit, when a stock is holding its own, like Amazon, kind of going sideways, and if the market does resume its uptrend, usually the stocks that were holding their own during the corrections are one of the first ones to break out. So I would consider Amazon in the category of holding its own. And if the market does break out, I think it has a good shot. If it can get above this 50-period simple moving average quickly, it's got a good shot at breaking out to a new high if the market does take off. Now let's go look at Adobe real quick. Maybe. There we go. And we can see Adobe looks like it could be breaking down as well. It is broke below that 50-period simple moving average. This is resistance right now. It was support, so it's currently just a little bit below. And if we have some down days in the market in the next couple of days, I think Adobe is in danger of really breaking down. And if I zoom out on this chart, we can see that Adobe has had one heck of a run. Going back to 2013, you're talking a stock that was in the $35 range, and now it was as high as $5.35 just a couple of months ago. So it is in danger of actually rolling over. And if this one does start to roll over, it could be a long way down. When we go to the weekly chart, the 200-day simple moving average is all the way down at $265 approximately. So that could be a big move down if the market does decide to roll over. Let's jump over to everybody's favorite, Tesla. We can see the giant move that Tesla's had, but Tesla actually is one of the stronger stocks right now as of the last few days as far as the big moving stocks that have been on big runs. We can see it is almost above that 50-period simple moving average after practically going sideways since August. And if Tesla can get into the $450 range and the market breaks out, I think it could be a leader again if we get another bull run or another move leg up in this bull market. Let's go check out Netflix. Zoom out on Netflix just a little bit. We can see Netflix is mired in a consolidation. So this would be a stock that is holding its own, but it is at the very low end. And if it rolls over, Netflix could have a long way to go because Netflix, of course, has been on a big run of its own, and it could easily get down to this support level just under 400. That wouldn't be all that big of a move for Netflix. And the market gets weak, I wouldn't be surprised because it is teetering on the edge of support as we speak.
And if it breaks through that level, and if it does break through that level, chances are it's probably going to slice through that 200 as well, and then we probably got smooth sailing all the way down under 400. But one of the other high-flying stocks that have been in the market has been Zoom Video Communications. And as we can see, Zoom has been very weak as of late. It has dropped down from its high of just under 600 bucks, and it's hanging around at that 50-period simple moving average at 450 bucks. And if this market was stronger, this would be a great buy at this moving average. But as far as with how weak the market is right now, I don't think too many people are going to be jumping in to grab this stock because, like I said, because of the election, everybody is kind of in a holding pattern to see what happens. Another stock that, of course, has been a high flyer has been Shopify, and Shopify is mired in a consolidation. As you can see, there is a trend happening of some of these bigger stocks. A lot of them are hanging out in consolidations, and that's actually a sign of strength when markets are pulling back. You want these stocks, after they have their moves up, to go sideways and consolidate and digest these gains. So this is a very, very good sign for Shopify. It is hanging out below the 50-period simple moving average, but if it could easily pop above it any day now, and if the market gets strong again, I wouldn't be surprised one bit if Shopify is one of the leaders again. And if we zoom out on Shopify, we can see that massive, massive run that it's been on. And Shopify, of course, has had one of the largest PE ratios that I've ever seen. I think last I checked, maybe it was around 10,000 or something ridiculous like that. I don't know what people are thinking bidding Shopify this high, but hey, more power to them. I guess they're all making money if they are long the stock. But next one I want to look at is Chipotle Mexican Grill, Chipotle Mexican Grill. It is hanging out at support right now as we speak, but it is teetering on the edge of breaking below it. So if the market does roll over, this is one I am definitely going to be watching, because if it does break below the support and start to bounce up again, if the market is still weak, once it moves up into this white line, the 8-period exponential moving average, there's a good possibility it could roll back over. So that might be a good short or a good put option opportunity for me if that plays out that way. But we can see that Chipotle Mexican Grill is hanging right at a key support level, so it is teetering on the edge of breaking down. Next one I want to look at is NVIDIA. As we can see, NVIDIA is below the 50-period simple moving average as well. It is trending sideways a little bit, and it also could roll over. And if it rolls over, it could easily break this support level in the $480 range, and it could be heading down to that yellow line. So this is another stock that is teetering on the edge, but it also could be carving out a consolidation. So that's the hard thing to tell at this point in the game. Is it going to be moving sideways, carving out a consolidation, gathering strength for the next move up, or is it going to fail the support level and break down? This is definitely one I'm going to keep on my watch list and see what happens. The next one I want to look at is Fastly. I was watching this one to see how it was going to react to its support level, but it has been super weak. As you can see, it blew right through the support level. And this is one I still have on my watch list. If this stock pops up to that support level and the market doesn't look super strong, if it looks like it could be getting weak again, this is one candidate I am going to look to get short or buy some puts. I'm most likely going to get short some stock. I don't buy a lot of puts or calls anymore. But this looks like a very nice trading opportunity if Fastly can move weakly up into this resistance level and then start to move lower. That would be a decent move. I would expect if I got short in this level and it started to roll over, it could easily make it down to this yellow line, which is hanging out at around 56, 57 bucks. So that would be almost a $20 move down. So Fastly is one of my favorite stocks to be watching at the moment if the market gets weak. And that's what happens. That's what you want to do when the market is at a teetering point like this. You want to build up at least a short list of stocks that are strong and stocks that are also weak, so you can be prepared whichever direction the market decides to move. If the market decides it's not going to roll over and move higher, it's those ones that are holding their own while the market is pulling back that tend to be the stronger stocks going out of it. And these weaker stocks, if the market does roll over, they tend to be the weakest ones when the market starts another leg down. And this is a great technical setup if it can rise into the support as the market starts to get weak again. So this is one of my favorite shorts to be watching right now. Another stock that I am watching is Intel. And Intel, I guess you got to zoom out a little bit to see it. Intel is very interesting at the moment. They've had a lot of bad news lately, had these gaps down. But if we zoom out the chart, you can see that Intel is hanging out at a very key support level as we speak. And this support level goes all the way back to 2017. And Intel is in danger of breaking that support level. And if it breaks this support level, and the market is weak, I am going to look to probably get short Intel as well. It is already below the 50 period simple moving average. It's already below the 200. This could fall rapidly if the market gets really weak. So this one and Fastly are probably two of the higher price stocks that are on my my watch list to go short if the market does start to roll over again. And I just wanted to share those stocks with you guys, see what you guys think about them. And well, I guess that is about it for the charts. But what I did want to do was show you guys my Webull account. I opened up a Webull account. Let me go to it. And I got to say, I really like it so far. I have yet to make a trade. My funds just went in on that very first M1 account video. I asked if anybody had a referral link, to send me their referral link so they could get some free stocks. As if I'm going to open an account anyway, somebody might as well get something out of it. But I found a YouTuber that I watched his videos, and he had a referral link, so I used his. And I guess he's going to get some free stocks. But I like Webull so far, and I think once I make a couple of trades and see how it works. And if I still like it, I'm going to put the referral link down in my descriptions because I don't mind promoting it if it's a good service. And I got to tell you what, you get a lot for your money because when I first started trading, just getting a platform like this was pretty expensive, and I'm not getting charged anything. And I remember once upon a time when I had my TradeStation account, I was paying $150 a month for everything. That was for the options, that was for futures, that was to have access to all that data, the real-time quotes, the whole shebang, all of their bells and whistles that they have over there. But I was paying $150 a month. I mean, that's how far brokers have come since then. They sure do give you a lot, and I got to tell you, I mean, I kind of like what you get at Webull, and if I make some trades and they look pretty good, I got no problem promoting this company. Oh, but a funny story is the free stock that I got was Southwest Energy, SWN, and the funny part about that is I'm holding on to some of that in my IRA. And I've been wanting to raise a little bit of cash. I've already raised a little bit, but I've been wanting to raise a little bit of cash in my IRA in case we do get a down move in the market. So I have a little bit more dry powder on hand to buy some stocks when they go down. Well, I've been holding on to Southwest Energy for a couple of years now, and I've actually been considering lightening up on that stock. Let me see if I can bring that up here. Considering lightening up on that position because it has just been going basically sideways for since I've been holding it. I'm probably down just a little bit. Let's see if I can go to the 4 hour here. Anyway, stock is down just a little bit from where I purchased it. But that was the free stock that I got. 1 share of SWN, and I guess after a couple of weeks I get my other 2 free stocks. So now I have to contemplate selling off that position plus 1 more share in this account if I want to get rid of Southwest Energy. So I thought that was rather ironic that was the stock that I got. But I had mentioned in some of my other videos I was going to buy some QQQ puts. Let me go over to the option chain right now. Let's go puts. You know what? Let's go down to 30. And the QQQ is trading at $274 at the moment, man. But these options are insanely expensive. I mean, going all the way down to the 262 put. I mean, I'm still looking at $150 a contract, and you got a delta of 20 on that. I mean, I guess they are pricing in that this market could get really volatile, which it could, but I'm just like shocked at how expensive these options still are. But being that they're so expensive, I don't think the risk reward is worth it for me, so I'm probably not going to take it, unfortunately. I was hoping to catch maybe like a flash crash type move if the market reacted adversely to whoever won, but I think I'm going to pass on that because that is not worth the risk. Probably the gain, I'd be lucky if I doubled my money if it exploded down, and that's just not worth the risk at a 20 delta with only a couple of days left on it. So unfortunately, I am going to pass on that trade. I was really hoping to buy some puts, but hey, let me know in the comments section. I'm curious to what kind of stocks you guys might have gotten if you opened up a Webull account and got some free stocks. I wonder if anybody out there has gotten any of those expensive stocks, you know, Apple or, you know, I don't know, Chipotle or some other high-flying stock. I think it's up to a $1,600 stock you can get. But let me know in the comments section if you have gotten any really expensive stock, because I'm curious to know what everybody got. All right, guys and gals, there you have it. That is my plan for the market. Regardless of what direction it goes, I've got some plays that I'm going to make if the market gets strong again, and I've got some shorts I can take if it gets weak. But let me know your thoughts in the comments section, and if you have any questions, please leave those down there. I'll be happy to answer any that I can. And also, if you got some free stocks from Webull, let me know which ones you got. And also, let me know your thoughts on Webull. Is it a good trading platform? You know, I like what I see so far, but I have yet to make a trade, so I don't really know yet. But please like this video if you enjoyed it, and subscribe to my channel if you haven't already. Thank you so much for watching my video, and until next time, take care, everybody.